Hey, welcome back. Well, whether we like it or not, tax season is officially here, and we have an expert with us this morning, CPA Michelle Lewis from Landmark in Rogers. Thank you so much for joining us.
You're welcome.
And so I think a lot of people, when they think taxes, they think April because that's when they're due by. But tax season has already started. Can you talk about when people can start filing and what all they need to do that?
Sure. So the IRS has opened their e-filing last week. So technically, you can go online, you could start filing. Really what holds it up a lot of times is the forms because, forms have to be approved by both the state and by the IRS. And so a lot of times that's what delays us on releasing returns. We're just waiting for those final forms to be approved so that then we can push the button and send it off and get it filed. But yeah, April 15th is generally the due date. You can file an extension. It's not a bad thing to file an extension, especially if you're maybe missing something. It's worth it sometimes to go ahead and do that, even if you file by April 15th, because then something might come up and you're like, oh, shoot, now I got to go change this.
Great advice. Now, for people who are maybe procrastinators, how much time do you really need to file taxes? Like, this isn't a one-day thing usually.
Generally, no. Now, if all you have is your W-2s, you can probably do that pretty easily in a couple hours. If you've got a lot of other things, you've got your own business, whether it's a business return separately or it's a Schedule C, it does take a little bit more time, and you want to make sure that you're really looking at everything to make sure you're getting all your deductions. We don't want you to pay more taxes than you have to. So we always like to say we want you to be a good American but not be a great American, so don't pay more taxes than you have to.
And when it comes to filing this year, there are some changes for taxes in 2026. Can you explain those?
Yeah, so more for 2025 filings for the 2025 seasons. There's only a few things that really kicked in, but some of those are the overtime deduction, the tip deduction. So most of those will be reported on your W-2, though the employers did not have to put the overtime amount in there, and you might need to reach back out to your employer to get help with that. But those are all deductions that I think a lot of people are going to be able to use. There's also a deduction for seniors, so 65 and above. If their income's under a certain amount, there's a potential $6,000 deduction for them. So there's a lot of new things this year that haven't been there in the past that you'll want to take the time to kind of look at that because it's not necessarily something that's your normal inputs. If you're doing this yourself, there's an additional deduction schedule, of course, because, the IRS likes more forms that you're going to have to fill out.
And if people are filling them out themselves, what would your advice be to them when it comes to kind of handling these new things as well as maybe they don't have those new additions, but it's their first time to file a loan?
Yeah, so, take a look at it. I will say if you're filing on yourself, you're probably using an online service to do that. They ask questions. They're really good about that, but really take the time to stop and read the questions. Don't just think, oh, I've never had a deduction before, so I don't need to. Really look at that because that's where those questions are going to be that might apply to you.
And for y'all, what is the biggest mistake that y'all see people make when it comes to filing taxes?
Yeah, so, a lot of times what we see is somebody comes in because they filed their taxes and now they're getting a notice. And it's probably that they might have missed something. Maybe they only worked for an employer for 1 month in January. They forgot they even worked for them. So they filed their taxes not realizing they're missing a W-2, or they changed bank accounts and maybe they had, some interest. Especially nowadays, everything's so digital. We don't get it in the mail like we used to. So you might be missing and not even realizing it.
And because of digital, there is the risk of scams when it comes to filing. So how can people protect themselves from getting involved in those?
Yeah, so, the biggest thing is the IRS is not going to call you up on the phone and say, hey, you owe X amount, go get me a money card, give me your bank account over the phone. They're not going to do that. You're going to get lots and lots of letters before you do that. So really open those letters, read through them. If you're not sure what it is, go talk to someone to see what maybe you need to do. The other thing would be that there is a PIN number that you can get through the IRS. It's called an identity PIN. And it basically, you have to put it in when you file your return electronically, and it proves that you are who you are. So it's a good way to help protect yourself. Every year, the IRS will send you a new PIN letter. If for some reason you don't get in the mail because you have to create an account nowadays, you can go in and pull that PIN number and get it and then file your return. It doesn't slow anything down. And it's just a good way to protect yourself.
All right. Well, great information. Thank you so much for joining us this morning. Good luck during tax season. I know it's about to be busy for you.